us now from the CME is Bob Iaccino. He is Chief Market Strategist at YourTradingRoom.com. Are you impressed that we at least stabilized after Wednesday, Bob?
A little bit. I'm sorry, I'm still focused on my man crush and Jack Welch. I think that's all I'm going to be talking about for the rest of the day. But yeah, I
just look at that as a nice little NAMBLA ad right there. Go ahead.
No, I would scream like an 11-year-old girl if I ever got to meet him. But the market's stable. Personally, from my perspective, when you're looking at the S&P, you're looking at the old relationship coming back. When I'm looking at the currencies to play off of the S&P quite a bit, especially the euro. When the euro collapsed from June of 2000, or rather from November of 09 to June of 2010, the S&P actually rallied quite a bit. And you're not seeing that over the last few days. You're seeing dollar weakness again play into S&P weakness. And that tells me that investors believe that recession is still in play, with the dollar weakness helping the exporters. So I'm kind of playing off the euro on that. And given that Italy is a bigger concern, Italy switching governments is of no concern to an immigrant Italian like myself. Because quite frankly, they went through a period where they had like 20 governments in about 4.5 minutes. So it's old hat to switch governments. But the austerity package, you would expect to see a move like Greece, considering that Italy is a bigger economy, has much more debt. You would at least expect to see a knee-jerk move, and that probably happens next week in terms of euro weakness.
Yeah, it's all... we are definitely held hostage. And it just... once the whole EFSF thing was done, Andrew was right about that as well. You were worried. I thought, if it doesn't become acute, I'm willing to let the euro. I know they're going to take a long time. There's 17 countries, but when Italy, there's no time to wait. When all of a sudden the third biggest economy gets a 7% 10-year. It just all comes right back home to roost. Doesn't matter what the policy.
Well, Joe, what's doing really well in this is U.S. corporate debt is doing well.
Yeah.
European corporate debt is actually doing well. You're not seeing those yield spikes. Those yields spike. And again, that tells me that investors believe that companies are going to continue to hoard the cash, which helps them service that debt. It's all sort of pointing in that direction.
You had an early call on that corporate debt would probably be a good buy 3 months ago.
Absolutely.
And the spreads had widened, and now they've narrowed again, right?
No question.
Things were not as bad.
Jack,
here.
I'm sorry if I made you uncomfortable.
Not at all.
Made all of us uncomfortable, Bob, but that's all right.
That's what I do.
Next time, shave the mustache.
I
we won't remember
creepy.
it was you.
I lean creepy.
Yeah, we won't remember it was you next time. All right.